All eyes are on the BRICS. More specifically, all eyes are on China. You've probably asked the question, why do I care about China, a country on the opposite end of the world? This doesn't affect me. Well, in today's video, I'm going to explain exactly what's going on with the BRICS and what that means for you. It doesn't matter where you are in the world, it is going to have an impact in these next few months and few years. In fact, in this video, I will show you how to play this properly as well, but you'll have to wait until the end. We're going to look at what's going on geopolitically. The heat is rising. There's no question about that. I want to look at what's going on with their banking system and the problems, the trillions of dollars that are impacted by all of this. There's so much to cover. Let's begin. First things first, the BRICS summit is going on right now, and China has an uphill battle. That's what we'll discuss here. Putin and, you look at this overall, what we were seeing, of course, Putin not making it to the summit due to the fact that the International Criminal Court said, well, we got an arrest warrant. So he's staying home. He sent Lavrov, his second in command, over to basically make sure that his place is filled and so on. They're having these meetings. Everything's going to come out in the next little while. We will see, and I'll bring you those updates. But I wanted to show you some other things, all right? Mainland China airs documentary signaling military preparation for Taiwan attack and willingness to sacrifice. I'm going to go through several of these, okay? Philippines accuses China of firing water cannons and its ships in the South China Sea. A key U.S. ally wants to walk back its atrocious embrace of China. And what is this? Italy is saying, that Belt Road Initiative, I think at this time it's best we come back. Isn't that interesting? Italy was going in, they were saying we want part of this, we want more infrastructure, we want our country to be built. Why? Because Italy right now is falling off the face of the earth. The whole country is going to look like the Colosseum if they keep things the way they are. The birth rate is super low. They're so indebted, they can't control anything inside and out, and they've got issues. So this maybe look like an opportunity to them, but they're going in reverse. China has this uphill battle to start convincing other countries, not just the countries like the BRICS nations, but others to do more business. And right now, that is a real challenge for China. China and Russia send naval warships near Alaska, triggering forceful U.S. response. And this is connected with that. Russia and China sent large naval patrol near Alaska. And so this happens all the time, especially with Taiwan. But think about it. They're basically saying, oh, you're going to send your ships and your planes outside of our area in the South China Sea. We're going to send them to your area. And so this is a back and forth thing. It's been going on for a very long time. But we're kind of seeing an escalation here. This is not a good sign, not for peace, that's for sure. I want to talk about the economy though, okay? So we can see that really quickly. I just want to move through that fast to show you what's happening geopolitically as we see it heating up, right? Well, there's a few things. I need to tell you, number one, that you got to expect the debt that China has to not be repaid, at least the foreign debt that it has. And I'm not talking about the country, but I'm looking at the companies, whether it is Country Garden, whether it is Evergrande, whether there's all these companies that have come up in the news recently. A lot of that likely won't get paid back, and they're doing some things to restructure that debt. But I believe that we should understand that part of this debt, not the whole thing, but part of that will not be paid back. They've already been through this. They've been defaulting, so we'll see what happens. Stimulus is going to be key to paper over the problems that they have right now. And so if we see that stimulus, it will look positive. And even though it's papering over, I get it, but that's what everybody, investors and everybody want to see. We'll talk more about that in a second, how you should play and position yourself in this way. And basically just saying that China is losing some of its share when we look at the U.S. imports. Now there's a new player. Well, not exactly new, but certainly at the top of the list. Can you think of who it is? Who is the number one partner with the United States today? Well, let me show you something. U.S. companies are buying less from China as relations remain tense. Chinese imports down 24% through May, and Mexico is now the United States' top trading partner. Now, clearly, they share a border, and so it's real easy. You got the whole, trade agreements and things that make it also easy. You've got tariffs. Remember what happened through a few years ago where you had lots of tariffs on the products coming out of China that made it more expensive. You got the difficulty of, logistics at the same time. So what did companies do? They said, I'm going to go out here and I'm going to try my best to diversify my supply chain. And they've been doing that to some degree. And in this article, they do talk about it. And you could see companies such as HP, Stanley Black & Decker, and Lego are among those that have repositioned their supply lines for American consumers, either to avoid the risk of being pinched between rival superpowers or as a part of a longer-term strategy to produce goods closer to customers. And that's important for sure. I just don't think necessarily that what we're seeing, like having it with Mexico, because the United States and Mexico have their own problems. But China, certainly a whole different world, right? Because they're constantly battling, it seems. But each country always has these tensions flying, and a lot of that is just politics and nonsense. Some of it, though, is really something that people are feeling, and they're definitely voicing their opinions. China's exports fall the most in 3 years as the global economy falters. A very important statistic. You got to look at the exports, of course. Exports right now. Who does that signal? That's the other countries, not necessarily China. It's not like they don't have the production or the means. They want it. They're saying, let's do business. But the countries are saying, well, you don't need, another 10 million Lululemon pants. Okay, just leave it there for now. So that's what's going on. And you can see that some of these signals are really key, really important. And part of that, I just want to highlight really quickly. Russia's economy is projected to grow despite Western sanctions. So when you have these two rival sides, you don't necessarily have all of the ability to squash them down. And that's part of why China at this time is trying to reach out with the BRICS summit, with the BRICS nations, trying to expand and say, let's do business on our own. We don't need the United States as much as we did before. But it is clear, it is obvious that the US consumer is the one with the insatiable appetite, the country that will go into debt right up on top of their, a way they can't even breathe. They got so much debt. And that's what manufacturers love. That's what companies love. They love those people who are willing to take on more debt than they ever should. And the US is certainly the biggest supporter of that. And so the point is, if you're going to sanction a country, well, it's going to be more difficult if they're able to actually seek additional partners and do things on their own terms. We'll see what happens. Here we have it. You could see this particular company, China's CITIC Securities, plans to move dozens of bankers from its offshore platform in Hong Kong to the mainland to cut costs and meet Beijing's call to bridge income inequality in the financial sector. I just thought it was interesting that even within like Hong Kong, it's getting too expensive. Let's bring our people to the mainland. And so obviously with the costs being much cheaper there, it is a factor. Just something interesting, like whereas you have countries saying, or companies saying, we're going to pull our business out of mainland China. Hong Kong perhaps is, those companies doing business in Hong Kong would say, nah, come back to the mainland. So we'll see how that goes. Here we have this other aspect, which we're talking about the loans, talking about the banks, and this is really big. Alarming home price declines. Home prices have dropped remarkably from peaks. Private data shows existing home price declines. Just look at some of these that are, over 20% from their peak, and they probably shouldn't have been anywhere near there in the first place, but it just shows us that a lot of these cities, that some of them are very big cities, and they have seen such price declines. It's not just the investors that are hurting, but it's the developers that are hurting. And of course, there's debt connected in with it. Very important, the debt. China vows more loan support for businesses to spur economy. More private firms may benefit from credit enhancement tool, steps meant to be pragmatic, quick to take effect. You got to understand here, they're trying to do everything that they can, right? China puts pressure on local governments in pro-growth push. Yeah, they want to do as much as they can, but are they going to be able to actually stimulate? And that's what some are asking. They're saying, are they going to be able to do this? I want to tell you what you need to be looking at, what you need to be paying attention to and thinking about right now until stimulus is presented. And I'm not talking about, oh, we dropped the interest rate a little bit. I'm talking about full blown stimulus. Until that point, well, then it is too early to invest. You might be thinking, I'm going to get an Alibaba, I'm going to get an Tencent, all these other ones, these tech firms, because if you look at what's happening in the US, those stocks have gone to the moon, but China's stocks have not done so. So you might say, hey, I can get an opportunity here, jump in. That's what a lot of investors would do. When the stimulus comes through, that could be the case. But as of now, the risk is certainly higher in China. Doesn't mean it can't go up, but the risk is higher. Diversify your sources. Okay, so when you're doing business of any kind, you want to be not 100% reliant on China. It doesn't mean, of course, China, they're going to do business with the US, but also at the same time, you want to be able to, if China's got a problem with the US, well, maybe you're still buying from China, but you're also selling to Europe. You're also selling to South America. You're selling to other places. So you want to diversify that way as a business, as an investor, as somebody who's, bringing in, if your business or operations or whatever you're relying on right now, you got to start thinking more globally. Regardless, we're going into this multipolar world. Doesn't matter if China has 5% of that or 10% of that. You got to understand that is happening. There's a big shift going on, and war could impact business. We got to be very clear about this. I think it's pretty obvious. It doesn't need to be a full-scale hot war, but we could have things on a different level. If you want to know more about this, if you want to be able to look at it on a deeper level, I've got information right here in the Discord. Things, all kinds of things. You want to know about real estate? Like, hey, what should I be paying attention to if I can invest in real estate? Well, these things right here will help you with that. So when you go into the Discord, it's totally free, link down below. You're going to be able to get tips like this, just talking about looking at your vacancies, looking at your permits, all these different things that are important. That's in there. You're going to see it on the left-hand side. There's a whole bunch of stuff. Check it out. As well as I wanted to highlight the comment of the day. All right, check it out. Wrench for a hammer. Thank you very much for your comment today. And by the way, everybody who's been commenting, this is very important, and I want to highlight that as much as I can. I make twice cash per hour as I did back in the year 2000. He's referencing on a video that I did, but not enough to keep up with inflation. Life was better then. I wish we could roll things back to the 90s. And could you say the same for the 1970s? When one income would have been more than sufficient, when interest rates were likely higher than they were right now, and still much more affordable. Crazy. That's the way we live today. I want to thank you for that comment. I want to thank you for all that which you share on here. Don't forget, if you share with somebody else, you help me out. Give it the thumbs up if you can. This really helps me out as well. I'll see you on the next one. Take care.